This Week in Startups is brought to you by Squarespace. Start building your website today at squarespace.com. Enter offer code TWIST at checkout to get 10% off. And Gawker Corporate Law, a boutique law firm specializing in the representation of entrepreneurs. Visit them at gawkercorporatelaw.com.
Hey everybody, welcome to another episode of This Week in Startups. This is the show where we celebrate entrepreneurship and the ability of some individuals to say, I'm going to take a huge risk, I'm going to take the path less taken, and I'm going to try to build something in the world, something that pushes the human species forward just a little bit, maybe makes people's lives easier or more delightful. It's hard. And as we see in the statistics, even the companies here in Silicon Valley, 3 out of 4 fail. Sometimes I hear 80% fail, 90% fail. The likely outcome of starting a company is failure. Yet some entrepreneurs are brave enough to still go and do it. It's like going off to sea to be an explorer, knowing that you're probably going to die somewhere in the middle of the ocean or out in the Antarctic or wherever it is. But the good news about entrepreneurship is that you should never overestimate the downside risk, because even in failure comes great lessons and learning and things you can take with you into the next adventure. Unlike Shackleton or Christopher Columbus or other people who sailed the oceans when they were very dangerous, entrepreneurs don't have to die out in the field. They can come back, learn from their mistakes, and keep building. My guest today is Jason Goldberg. You probably know him from his incredibly large company, Fab.com. That eventually didn't go so well. But what I respect about Jason is he never stops creating. And there are 2 types of people in this world that I've learned over the years. There are people who create, and there are people who wait. Wait for permission, wait for the perfect moment. And then there are people like Jason who just keep building. He's taken a lot of arrows, but he has my respect because, Jason, you are always producing something. You're always trying to build the next thing.
Thanks, Jason. Appreciate that. And thanks for having me here today. And I'll try to keep up with you. I've got a little bit of a cold, but we'll power through.
Yeah, you'll be okay. You're indefatigable. You have this energy about you. Have people say that? Have they told you this before?
You know, it's one of these words I had to look up in my early 20s. I was working in the Clinton White House, the first Clinton White House. Well, there actually wasn't a second one, but I was working.
Terms.
Yeah,
really
exactly.
Should have been 4.
Yeah, so in 1993, 1994, and I was working for a guy named Gene Sperling, and someone wrote an article called us the Whirling Sperlings, and they said they use this word indefatigable to describe our team, and I had to look it up. Didn't know if it was a bad word or not. Turns out it just means you never get tired. And yeah, I mean, look, I take the approach that you need to work yourself into opportunities. Nothing comes on its own, but you know, baseball analogy, you got to keep getting up at the plate and take another swing, and that's so.
And Fab.com, let's go through that real quick. I don't know if it's been what, 2 years or 3 years? How long has it been since you've been able to put that to bed?
Yeah, we basically sold Fab.com. We negotiated the deal mid 2014 and then early 2015. So it's been more than 2.5 years at this point. I guess about 3 years. I mean, I moved to Berlin, Germany in mid 2014 when we had basically a signed deal to sell the Fab brand. And we had a private label sub-brand that we were developing called Hem that we spun out of
furniture.
Correct, yeah. And so almost thinking like Warby Parker for furniture design. That was a sub kind of spin out from Fab. But yeah, like Fab.com was, at one point one of the fastest growing, for not just e-commerce, but yeah, we went from 18 million to 120 million in our first year in sales and revenue. Yeah.
Amazing.
And but we grew too fast. Yeah. We made a million mistakes. I never want to touch physical product, inventory again in my life. But yeah,
like unicorn status.
We did. We at one point we were worth over $1 billion, and yeah, it didn't work out, and didn't work out for.
Well, what do you, when you look back on it now, you have plenty of time, and it was a great effort. I know that your investors, because I know a lot of them, really respect you, so much so that a large percentage of them keep investing in you. Yeah, that's always a very good sign. Well, when you look back on it, what do you think the key mistakes were, and what would you do differently?
Yeah, I mean, I guess in business and life, you can make mistakes, you can lose a lot of things, but you can never recover from integrity. And that's one thing I've tried to pride myself on is, always be honest to the people around you and, full transparency of what's going on in the situation. And the thing with Fab, I think the reason why a lot of our early investors are still behind me today, and the companies I've done since then, is just we're all in it together. We're always very straightforward, and I think we all together could look at it and say, here are things that in hindsight we should have done differently.
Yeah.
And yeah, I mean, we grew too fast. I mean, that's the biggest thing. You can't defy gravity. There's very few companies who actually manage to do that. And you
spent a lot on.
Well, it's not just spending. I think it's organizational. I think it's if you go too fast, you break things. And we didn't have, especially for I think a physical product company, we didn't have enough of the operations in place, and kind of weren't focused early enough on kind of repeat customers and cohorts and stuff that just seems like so basic, but it was
blocking and tackling now.
Exactly.
But at the time when you're growing 10x year over year, and the investors are throwing money at you, and it just feels like we should just keep trying to go 10x.
Yeah, look, we raised too much money, we expanded internationally too fast, the assortment got diluted too fast, et cetera, et cetera, et cetera. I mean, the key thing is, as the CEO, it all comes back to me that I didn't build the organizational structure to withstand the growth, right? And in hindsight, if we had said, instead of going from 20 million in the first year to 120 million, if we had said, let's go to from 20 to 50 and do it profitably, and then do 50 to 100, which is still extreme growth.
Amazing.
The business would be entirely, it would have survived. It would have been very valuable. And then, look, I take all the blame. I always say that, the mistakes are all kind of self-induced in the sense that, if we had made smarter decisions along the way, we would have built a better business. But I also, at the same time, you also have this thing called Amazon, right? And and it's we saw that, that where the writing was on the wall, where things were getting difficult, is when we saw that our awesome team of kind of curators were finding products, and then, at the beginning on Fab, it was you couldn't find these things anywhere else. It's we were curating for the world. And then a year into it, we realized that, they were basically, we would spot something and the next day it'd be on Amazon. And that was, and kudos to them. I mean, Amazon is, one of the most successful businesses of our time.
Brutal competitor.
It's something, the people say, what are the first things you did after, you left Fab? I bought a lot of Amazon stock. I just, I'm a big believer. And
well, then you've done okay.
It's been a good run on that front. Yes. For everyone involved. Yeah.
It has changed how startups work in Silicon Valley to have Amazon and Facebook.
Yeah.
People who are willing to, in Facebook's case, relentlessly copy and even perhaps steal data or use data that they're getting under false pretense vis-a-vis the Facebook Connect, which was something they let people use, and then they kind of study them, and then they copy them or buy them or kill them. Some really cutthroat behavior from what I understand, and what is being litigated even to right now. People are litigating against Facebook for doing bait and switch against things like, use our data, use our graph, but we're going to study you and cut you off eventually, which they did to a bunch of people. And then you have Amazon. And Amazon is just able to just not make money or lose money to destroy competitors.
But Amazon is, I think, just the best execution story of of our time, and maybe of all time. I mean, those guys just relentless execution, and just willing to study a market and go after it. And
it's different than when we started, because back then they were so busy with their core businesses, and they weren't in this expansion mode. They hadn't gotten so big. They didn't have so much cash. They didn't have such large staffs. They were under-resourced, and they were just trying to capture their specific business. Now it's changed. The markets are demanding a lot of them. They have massive money-printing machines, and they're not the big, dumb competitors. They're the fast competitors. This is a crazy world.
Well, I also have tons of admiration for Amazon on the AWS side of the business, which is one of the best businesses that have been built in the last decade as well, just built within Amazon.
Nobody knows, but this is doing 10, 20 billion?
Yeah, and but for me, it's also been a model as we've been working on the Simple Token project. Because we kind of looked and said, it does, today we have this environment where there is no AWS equivalent for blockchain or for tokenization. And we said, well, if you dial this forward a few years, there will be, right? And we saw this white space to kind of jump into this and try to create this.
So let's take a quick break, and then we'll talk about this new simpletoken.org, which you can go take a look at, and we'll be right back after this important message. Hey everybody, let me take a moment to tell you about one of the greatest services on the internet today. It's Squarespace. We use Squarespace for all of our events, sites, launchscale.net coming up in October, launchfestival.com, Launch Festival Sydney, which we'll be doing for the next 2 years in June of 2018 and 2019. And the reason we use Squarespace is because we are able to have beautiful, beautiful templates and have the site up and running quickly, and it's gorgeous. If you need to build a new website for your business and showcase your work, a blog, publishing content, selling products or services, maybe promote a physical or an online business or an offline business, announcing events like we do and special projects, you can get one up and running in minutes with a non-technical person, a writer, your assistant, marketing person, a PR person, the sales team. Anybody can build a Squarespace website, including you. If you hear my voice, you are able to, if you have an internet connection, create a Squarespace site. Beautiful templates, and those are created by world-class designers. Powerful e-commerce functionality, everybody knows about that now, and everything is optimized for mobile right out of the box. So when your consumers need to look at the site and they have the latest, greatest Android or iPhone, whatever it is, watch, everything just works. They give you great analytics and search engine optimization. You don't have to go buy that somewhere else. And they have secure hosting. It is never a service where you have to upgrade and get patches and worry about getting hacked. 24/7 award-winning customer support. They take it seriously. And here is your call to action. Go to squarespace.com for a free trial. And when you're ready to check out and launch, just go ahead and use the offer code TWIST. So go ahead and go to squarespace.com and use the offer code TWIST, T-W-I-S-T, to save 10% off your first purchase of a website or a domain. So 10% off with the promo code TWIST, T-W-I-S-T. It's an amazing, amazing company. Anthony's a good friend of mine over there. He hosted a big book party for me with James Altucher back in July. Thank you for that. And thanks for making software that's easy and powerful and keeps us up and running here at launch. We truly appreciate the product, and we're honored by you supporting independent media like This Week in Startups that helps so many people, hundreds of thousands of people every week tuning in, millions every month, tens of millions over the last couple of years, all because Squarespace and other partners we have support us. So I just want to take a moment to thank them for that as well. For that reason alone, go ahead and check out squarespace.com. And remember to use that promo code TWIST so they know that your Uncle Jason sent you. Okay, let's get back to this amazing episode. Hey, everybody. Welcome back to This Week in Startups. Thanks to our partners for supporting independent media like This Week in Startups. You can help us out by reviewing and rating the show on iTunes or other services like that. And you can subscribe to our YouTube channel, youtube.com/thisweekin. My guest today, Jason Goldberg. He's Beta Shop on the old Twitter, and he's the director, co-founder, and CEO of Simple Token and Pepo.
Correct.
Which you've been working on for the past year, a social network around interests.
Yeah, so after the Fab story, we had spin-off from Fab that was Hem, which we sold at the beginning of last year to a group of financial backers behind the Vitra company, which is a $1 billion+ furniture company, Swiss, German. Right. And the next day I started a company called Pepo. And so we've been at Pepo working for about 15, 16 months now. And the concept of Pepo was, how do you democratize the market for everyday expertise and take aim at markets like TripAdvisor, Yelp, Zomato, who are basically building audience businesses on the back of user-generated content, mostly around local and kind of travel tips. Yeah. And we saw an opportunity to democratize that and to start to enable the people who are providing the content to get value from the content that they're creating. Right.
Something that Facebook doesn't do. If you put content on Facebook, you do not get paid for it. You put it on Twitter, you do not get paid for it.
Correct.
And there's been some talk, I've talked about it on this program, of why is that? Why wouldn't Twitter or Facebook share revenue with the people putting the content on there like YouTube does?
Yeah. I think it's we have these businesses that are created in Web 2.0, which are all based on these audience models. And what we're seeing with kind of the decentralization and blockchain concepts is this thinking now that's going into, well, what if the internet wasn't that way? And what if the internet was more of a power to the people kind of promise we had back in the mid 90s when people would start tinkering around with, with the World Wide Web. And, how did we get here? People are kind of saying, does it make sense that you have a couple of large companies, and especially, Facebook and the properties that it owns, kind of controlling kind of access to distribution for.
Right.
And, I think time will tell, right, to see if we have some, some are saying this could be Web 3.0 or, is the decentralization models. But we said that at least we think there is something there for users to, or people, consumers, to start to be able to monetize their own experiences and expertise rather than just giving it all away for free.
Right.
I think we've seen the rise of influencer markets, things like Instagram, and we see influencers being paid, but more still on like a CPM basis or promotion basis.
Paid under the table a bit, like it's Kylie Jenner or whoever these Kardashian sisters are getting paid $50,000 to put something in secretly in an Instagram video.
I've got friends who are getting paid a couple $1,000s to hold up like shampoo bottles in their Instagram feed.
Really?
Right? And it's just because they've got 40, 50,000 Instagram followers and a target audience that people like, and it's like totally under the table type stuff.
Right.
And I think Instagram's trying to get their arms around that, but we looked and said what if you could have new models where it's not just that you have followers, but if people actually value or appreciate what the content you were creating.
Right.
And so
you have Patreon in that space, like of donations.
It's a movement in that direction, and you could take this to all sorts of different kind of analogous spaces as well, or tangential spaces. Maybe it's in the music industry where everything today is funneled through 3-4 major recording labels. What if instead you had a decentralized independent label or a DJ mix label where it's not even a label, so to speak. It's just people paying other people for either listening or for valuing or appreciating their content, or proposing bounties for would you make me a mix on this song, or kind of that sort of thing.
It could be two-way and much more dynamic, the currencies. We've been toying with these concepts around Pepo for the better part of 15, 16, 17 months, and we got to a point earlier this year where we were ready to start looking at a kind of a cryptocurrency token for Pepo. We call it Pepo Coin, and the idea was to create a token based off of Ethereum, and to have parts of the Pepo business on a blockchain, not the entire business, but to leverage this kind of tokenization to create user rewards and incentives to enable people to earn by using the service. So giving users kind of like a choice of if I want to get the currency, I either can earn it through my contributions or I can buy it, right? And we had this amazing aha moment about 4 months ago where we realized that we were going to have to build so much technology and so much enhancements on user experience and so much kind of admin tools and kind of back-end support to create this kind of bridge from where cryptocurrency is today to consumer that we kind of say like, aha, that's the business. Got it.
And that's what Simple Token is all about. Is basically
building that back end.
Yeah, well, it's kind of how do you everyone's talking about ICOs and kind of tokens and blockchain, but the truth of the matter is that the blockchain technology is so far from being ready for consumer apps that when we first went out and started building these concepts around Pepo, people in the blockchain industry said, "Go home, come back in a couple of years." That's literally what they said to us.
Why is it too complicated? Because consumers don't understand it, or the infrastructure doesn't exist,
yes,
and blockchain is just fundamentally flawed in its current state.
It's not flawed. It's just it's early, right? And so think about it's like we're still building the plumbing for this decentralized web, right, or decentralized internet. And blockchain is all based on these smart contracts, and how do you scale these smart contracts? And it's just, so give an example. So Ethereum today, which is what apps are built on blockchain, Ethereum today scales to 850,000 maximum transactions per day. So think about that, right? So one app like Pepo, for instance, would be 2% of all daily Ethereum transactions if we went onto Ethereum today. So you need to, so that's where you kind of need to have these innovations around, well, what's on a public blockchain, what's on a private blockchain or a side chain, things that most app developers know nothing about, right? And it's actually very complex because all these things are based on these completely auditable smart contracts that anyone can see is, it was done appropriately. And so we looked at this and we said we would need to build so much technology to enable Pepo to tokenize.
Right.
And actually, the first thing we said when people said go home, people literally said, come back in 2 years. Come back in 2 years. We're still building the plumbing. And we said, hold on, that's crazy. Rather than waiting 2 years, why don't we build kind of an evolution or a bridge from here to there? And so like, example is like, I said, like with Ethereum not scaling today, people said, well, there's lots of projects underway to enable Ethereum to scale, so come back later. And we said, well, why don't we build some things in the meantime? As an app developer, you're used to kind of thinking about, kind of iterate, right? Yeah. And it's like, so why don't we start iterating, right? And so we built all these concepts around the links between public blockchain, so public Ethereum to side chains, and what could be done kind of with a floated ERC20 token versus what is done with kind of some basically used with something that's staked against kind of creating a side chain token. And we built all this kind of architecture out and technology out. And the response from the industry has just been awesome. And that's where this great kind of feeling of the last few months where we went from people telling us to go home to people cheering us on now and saying, you guys could build the kind of the software bridge between, crypto and consumer. And it's a lot to build, to be honest. I mean, it is the biggest project. It's the biggest project I've ever undertaken. It's the most, I think, exciting thing I've ever done because of the enormous potential. I mean, we could see thousands of companies that could come on to, basically harness the power of blockchain without building any code themselves. So like they can focus.
In a way, it's sort of like Twilio. Before that, people were like, Uber could have and Lyft could have built their, SMS gateway themselves. It just would have been a year of work.
Yeah.
When Twilio came out, it was like, just plug this in. We'll give you a phone number.
You got it.
We resolved it with all the other carriers. Just start sending messages.
Yeah, I've equated to Twilio or to Stripe or to Shopify. When we built Fab, we built our own payments integrated with Braintree, but we built a lot of the infrastructure ourselves. And then Stripe comes along and it's like, oh, we could have just like inserted 3 lines of code.
Exactly. And be done with
it. And it's funny because like there's all these blockchain purists, and I have tons of respect for them, who have been on the front lines of blockchain. They, some call them anarchists, but they're diehards. And I totally appreciate them. And
we had them at the beginning of the web too, where people were like, how dare you put a banner ad on?
Yeah, exactly.
Like when we started putting ads on blogs even, and this is whatever number of years into the web, there was a group of people who said, you're putting advertising on blogs, you're destroying blogs. Blogs should not have ads. They're personal. It's a personal journal.
Yeah. So
or having 2 bloggers on one blog was a big objection.
That's not a blog anymore.
It's no longer a blog.
That's a
blog had to be an individual. In people's minds. It was weird.
So we like a lot of the crypto purists, they've kind of taken the approach of either or before, they had this approach of either you're a decentralized app and you're a blockchain purist or you're not. And we also challenged that assumption. We said, there are thousands.
Explain the difference between that.
Yeah, so it's like a decentralized app would have 100% of the app on a blockchain, right? And so you call either it's a DAO or a DApp, but it's basically the notion that you don't have a proprietary service like a Facebook or a Google that's managing all the interactions. Everything is person to person on a blockchain,
There's
immutable.
No central authority.
Exactly.
There's no central location. It's just out in the Wild West.
Right. And we've kind of taken the approach and saying, there will be apps like that.
Right.
But come on, we're not going to jump to utopia tomorrow.
Right.
So why don't we enable, tens of thousands or millions potentially of app developers to have parts of their apps on blockchains and to benefit from having those parts on blockchains where it makes sense, without having to be entirely expose all their customers to, hey, we now move the whole app to a blockchain.
Right.
And so this is just
and the Wild Wild West. What happens if that blockchain
Yeah.
collapses?
Correct. Yeah.
And all of a sudden, you've built years and years of people's assets. In the music example, people are paying each other, and then all of a sudden, Bitcoin or Ethereum, the ledger gets too big, it starts crashing, or the Chinese miners decide they're going to go to war with the American miners, and you're caught in the middle of it.
Yeah. And so we take the approach that, we see, every day we're uncovering, more and more potential benefits from having parts of your app or all of your app on blockchain, whichever you want. We see that there is a ton of white space right now in creating kind of the service, the protocols that will enable app developers to harness that so that they can focus on their apps and their communities while we focus on the blockchain infrastructure. That's what we're building.
All right. When we get back from this final break, you published your deck.
Yes.
to the web.
Yes.
I have the deck here. This is a very innovative thing.
Thank you.
You're saying, hey, I'm going to be a little bit of one of these open corporations. I'm going to publish, here's what we're doing. And that means you're tipping your cards by definition, but I'm assuming you're going to get a ton of feedback. So we're going to go through the deck. We'll rip through the deck. You tell me and pitch me like I'm an angel investor, which I am, and we'll go back and forth, and I'll ask you questions. It'll be like a little mini session here between a great entrepreneur and an okay angel investor on This Week in Startups. Okay, hey, let me give a quick thank you to my friend Scott Gawker. Gawker Corporate Law is a boutique law firm and one of the oldest partners and sponsors of This Week in Startups. They specialize in representing entrepreneurs and startups, and they encourage fixed fees, which means they will not scare you when you get that bill from your attorney every month. You're going to know what you're going to spend ahead of time. Super important for startup companies. They believe billable hours reward inefficiency. And their lawyers all have decades of experience, 10, 20, 30 years. No junior associates learning on the job with your startup. They do things like acquisitions and mergers, licensing, terms of service, privacy policies. And Scott Gawker is a true mensch. He comes to all of our events. He gives tons and tons and tons of his time for free to startups to help them grow. He is passionate about startup companies and entrepreneurs. Give him a call, 415-979-9998, 415. You know is San Francisco, so just remember 979-9998, 979-9998. Or email Scott at Gawker Corporate Law, Scott at Gawker Corporate Law, or visit GawkerCorporateLaw.com. Thanks again to my friend Scott Gawker, who is just a tremendous supporter of startups. Okay. Hey, everybody. Welcome back to This Week in Startups. I'm your host, Jason Calacanis. You can follow me on Twitter at Jason or Instagram at Jason. And you can buy the new book, Angel, my new book about angel investing in 150 companies and 6 of them becoming unicorns. That book is available where fine books are sold, or you can go to angelthebook.com. Also, a little plug here for angelpodcast.com. We came up with a second idea for a podcast. It's now in the top 50 in business. It's even higher than This Week in Startups, candidly, which was a little bit shocking to me. But I guess, hey, people want to hear from the money people and the investors. So go ahead and check out Angel Podcast, the brand new podcast, which is doing really well. My guest today, Jason Goldberg, serial entrepreneur, indefatigable founder. You can follow him on Beta Shop on Twitter. And you probably know him from fab.com, where he had a very mercurial rise, and also was, like me, a target of Gawker and Nick Denton and all kinds of things. He had a very special thing about you, even more so than me. They love to attack you.
Yeah, well,
It was brutal.
it's fine.
It was fine, but it was kind of brutal. Like, they made it very petty.
Like
they would take, I remember they would take your vacation photos. And they would try to make something out of you being in whatever European city with your boyfriend / husband. And I always felt it was just a little odd, his obsession with you.
It's fine. It's like we're out there, we're public, and I'm 45 years old now. I think when I was 35 or 40, I took that stuff a lot more seriously.
Right.
Today, it's just keep building stuff and trying to make an impact. And
What do you think of it getting demolished and crushed by Peter Thiel and the Hulk Hogan lawsuit?
I'm just gonna say it's fine.
It's fine.
It's fine.
It is interesting. It's like I have
things go up.
Are you and Nick and Denton friends, or are you frenemies, or do you have this weird arm's length relationship?
If I saw him, I'd buy him a drink.
You would?
Yeah, I don't have enemies. Seriously,
yeah. Life's too short.
Yeah.
I agree.
There's not a person on this earth that I wouldn't walk up to a bar and give a hug and buy a drink to.
I love it. Yeah. I love it. You're at peace with it. See, I think when you get older,
which I said 5 years ago, I maybe wouldn't have given that answer. Actually, I know I wouldn't have.
Exactly. I had drinks with Nick in New York last year.
I gotta say, I know we're gonna get into some token stuff, but it's with age you get perspective. With having experiences, you get perspective.
Yeah.
There's investors that I've wanted to strangle before that you kind of say, what? They were doing what they thought was right at the time.
Yeah.
I've had employees that I've wanted to strangle. Strangle's the wrong word. We didn't get it.
No, they made you crazy.
Yeah,
we understand. It's not a literal thing.
But it's everyone.
They made you crazy.
They were doing their best in the situation, and we all make mistakes. We all act in ways. We're humans. It's and that's fine.
We're imperfect humans, and what people forget is these are high stress environments.
Yeah.
And there's a lot at stake.
Yeah.
And the industry we're in draws individuals of extreme qualities?
I just want to see people be good to people. It's like,
That would be nice.
I mean, it's like I've been in so many meetings over the years with investors, with reporters, and I think I have a special place in my heart, a good place for people who take every meeting with respect and kind of make some warmth to it.
Yeah.
And you go into some meetings and you still have people who kind of they bring in their arrogance or they kind of chip on their shoulder, and life's too short. Just focus on good people.
Right.
Yeah.
I think so. It's very fascinating to me, like the amount of effort you put in, and then to have people attacking the people who are trying to change the world for the better.
Yep.
It's a weird toxicity in the world.
Yeah. I mean, look, let's say we published the deck for Simple Token.
Right.
There will be people who attack it, tear it apart. That's fine. It's like that's part of the point of it too. Is like we don't have all the answers. Any entrepreneur that tells you they do is full of shit.
Of course.
Right. And so we decided that the blockchain movement industry is one of openness, transparency, decentralization, and we said we want to be part of that. We want to be taken seriously in that. We brought a great team around it who are both from consumer internet and from the blockchain industry. We're working with great advisors on it, and we want input. What we don't want is just criticism. We want input. Right.
Yeah.
So bring me your input. We'd love to have it. Yeah.
I always found with criticism, you read it, and it's just like toxic, extremely valid point. In which the troll wants you to improve and has something to add that they want to be respected for. And here's a bunch more toxicity and insults and ad hominem attacks.
Right. So the mature thing is you actually were able to read through the trollness and find that one point. You said, what? They had something that we should pay attention to. Yeah. And the younger me probably be like, that whole thing was bullshit. Right. And now I'm able to see.
No, I literally on Twitter would just be like, "Go fuck yourself. What have you done in the world?" I literally would just snap off on people. Like, call me when you've created anything in your life. Now I'm just sort of I look for the little gem. Yeah. And then I make some funny joke, self-deprecating joke about their, insults, and then I add, but a good point here. Yeah. And it just all of a sudden turns them into super fans. Okay, here we go. We're going into the deck, and people can find this deck at simpletoken.org.
It is on the website.
It's on the website.
We'll also, I should say, Jason, we'll also be publishing a series of what we call side papers, diving deep into many of the topics in the deck so that people can see how we're fleshing them out.
Got it. Right. So there is a movement right now called open companies. I don't know if you're aware of it, but it's just like people doing meetings on live streaming and just trying to be more open.
I think some of that is interesting. I think for us, this was more like I'm also like, we're kind of in peer review right now. Right. And so this is a project that we're saying, please give us input on. Yeah. And hopefully some of that, putting the information out there, people get excited about the idea. Yeah. And other people might poke holes in it. As long as it's constructive, great.
Hey, they may plug a hole. Yeah. All right, let's look at the first slide here. I thought this was, for me, a great slide to start on, which is the cryptocurrency landscape. Everybody's talking about it. Nobody's doing it. Explain this slide and why you're starting with this.
Yeah, I mean, I think we've seen these great run-ups in kind of the market cap of Bitcoin, of Ethereum. A lot of people out there are making money off investing in these cryptocurrencies. But the reality of the matter is it's still very, very early days. The money is, it's speculation. It is, the hope that these become valuable assets over time. And the reality is more represented in a slide like this, that in actual kind of end consumers who actually have adopted cryptocurrencies, it's still really, really small. 16 million was, the count that we got of kind of actual individuals who have crypto wallets.
Yeah, and who knows how active they are.
Right, and well, maybe, I saw one report yesterday where maybe it's gone to 20 or 25 million, but come on, and we're still talking relative to the broader internet. It's 0.5% of all internet users around the world. And there's
3.3 million global, 3.3 billion global users, and 1.3 billion WhatsApp users. Yeah. So we're talking about a very small number of WhatsApp users, 1%.
Yeah, and you think like a service like WeChat, which has 800 million payments users, not even WeChat users, about 1 billion WeChat users, but there's 800 million people who are using WeChat for payments. That's like more Venmo, of an example right now of actually having the closest thing to, let's say, it's not cryptocurrency, but to kind of
digital cash.
Exactly. Yeah, is through WeChat today.
What we used to call cryptocurrency, Digital cash.
Digital cash. There you go.
Never actually came to fruition.
But, and so why is that? Well, one of the reasons is, it's crypto, right?
Yeah.
And it's like, obviously, is my mom going to use this, right? Are your friends going to use this?
Yeah, and here on the slide, we're seeing a Bitcoin wallet, which has your Bitcoin address listed as like, 1KGE, and what do they call those? Not the barcodes, but the
QR codes.
QR code, and that you have 0.2419 Bitcoins and all this weird fakaka transaction history. It's like literally people setting up their, IP address and their router manually to set up their browser.
Well, the best practice for having a crypto wallet is to have a hardware key.
Yeah.
Right. So I think about most of what the world that we work with is going from hardware to software.
Sure.
And this is a case where everyone's saying you better back it up with a piece of hardware.
Right.
Right. Because if you lose your key, you're done. Someone can
really
steal it.
Screwed,
right. Yeah. But so the point is all this. It's early days. There are benefits to this technology. There are enormous benefits to blockchain technology, but there's still this bridge that's needed to to mass adoption. And take the wallet as an example, is it's going to take innovation on how do you make crypto keys less complicated and ownersome for end users.
And at the same time as making it easier, making it actually safer
Absolutely.
Because people there's so much at stake here.
Yes. Yeah.
That it's like the early days of PayPal, where if you do hack a person's PayPal, bingo.
Yeah, exactly.
You're going to get a big payoff. Here, people were so desperate to hack people's crypto wallets that they spoofed Verizon to get new SIM cards.
Yeah.
To get their two-factor authentication intercepted.
Yeah.
So literally, people are like, "Oh yeah, we changed your Verizon for you, and we changed your." Two-factor authentication, and all of a sudden your whole Coinbase has been depleted.
Yeah, well, two-factor
Coinbase is like,
another broken thing as well. So
it's broken.
Yeah, entirely. Yeah,
because you can intercept the SMS.
Yeah. And so, we were talking about kind of the scalability of Ethereum is another thing. It's like there are lots of great projects underway to help Ethereum scale from about 850,000 daily transactions today to millions and tens of millions. But we're not there yet, and so that's another kind of gating factor to getting consumer apps on something like Ethereum.
Some people are saying Ethereum's going to crash.
Yeah, look, we're big believers in Ethereum. We think that there's a great group of developers around the world who are investing in Ethereum transactions.
But the ledgers are getting so big.
Yeah, I think these are problems that'll be solved. Actually,
how do you solve the giant ledger problem? Is it just going to be like we're going to have some giant cloud computing company participate?
I think without kind of giving a specific answer, I think the answer is kind of in the question in the way that you phrase the question is that the economic incentive is so great, or kind of reward is so great for solving that problem that people will come together and figure that out.
Right.
Yeah.
There's so much at stake.
Yeah.
All right, here we go. The cryptocurrency landscape. Public Ethereum is not yet capable of supporting consumer microtransactions. Now, microtransactions have been the holy grail of the internet for 20 years. The concept of I give you a penny for every article I read on the New York Times. I read 10 a day. All of a sudden, it doesn't feel like that much, but at the end of the day, I might give you a couple dollars.
I mean, almost think about like you and I both. We were there during the dig days, right? So,
right. Sure.
Where, like when this is we were upvoting we're digging articles, right? And the precursor to Reddit and all this other stuff, right?
Slashdot.
Exactly. And imagine if you had a version of that where every time that you upvoted, you were kind of basically passing a token or passing a currency from you either to the person who wrote the article or to a pool that is shared amongst the people who made that article.
So interesting. Yeah. Kevin Rose just a month ago on this very program said he wanted to build a new dig.
Yeah.
But with cryptocurrency. Yeah. It's like a dig coin.
Well, so I'll tell you, so this is it's great, and people should build stuff like that, and that's part of the reason we're building Simple Token is so that they can focus on that, focus on their economy and on their users, and we'll take care of all the other stuff, right? All the other stuff, meaning how do you create your token? How do you put restrictions on tokens? So an example is you might decide that you want to give some of your users tokens to warm them up. Let's just talk about let's call it Digcoin, right?
Right, Digcoin, sure.
Digcoin, right? So the new Digcoin, right?
Right.
So let's say that Kevin wanted to say, well, to get people bought into and warm up to the system, we want to give them a couple hundred Digcoin each that each are worth about a penny each today.
Sure.
Right.
We give everybody $1. Digcoin.
Right. And we say that, but we don't want them to just cash that out.
No.
Right. Because then we're just getting them free money. So you need to have, these are almost restricted tokens that people can spend in the system, but they can't just put in their pocket.
Right.
You could also have reward tokens that are based on, almost like gamification, that once you've done a certain number of things, maybe it unlocks some tokens.
Yeah. If you log in 10 days in a row, you get a reward coin.
And you might make it so that certain of those tokens expire if they're not used as well. And
sure.
that's, again, that would be different if it was just giving them Ether or giving them just like
where they
cash.
could just game the system, try to pull it out.
Right. And then you would need to have certain things like making sure that every user is a one person, because otherwise you just create 1,000 accounts and vote yourself up.
Sure.
Right. And give yourself lots of coins.
Kind of problems,
right.
Yeah.
And these are the kinds of things that we're building for these companies, right? All these kind of as a service.
And it's really interesting when you look. I love this slide. I'm assuming you made this graphic when you made the slide, or is this somebody else's?
Oh, we made this, yeah.
So this is one of the great things about decks, and I always tell this to founders. If you make a beautiful deck and the infographics you make come from your brain, you build credibility with the people who might invest or join, anybody who becomes a stakeholder, employee, or investor. What I love about this one is you have a nice core circle of blockchain, but then around it you have digital currency, smart contracts, record keeping, and security. And when you look at digital currency and smart contracts, you put the use cases. Escrow and wagers are two that keep coming up with smart contracts. Hey, you and I want to bet on if Trump will be impeached or not. And I give you 4-to-1 odds, and boom, here we go. Or I want to sell you a domain name. We put it in escrow for fab.com, and bang. If the internick record changes, then the cash gets released. Yeah. If the cash is deposited.
I mean, all these are about removing intermediaries is really what they
correct.
Are. Right. So it's like the digital contract itself becomes the intermediary it's autonomous, that you're not reliant on escrow.com, wherever it is, to kind of verify it.
And I love this section. I love the digital currency section, because this is where I think what you're working on with Simple Token makes a lot of sense, because you have rewards, incentives, vouchers, coupons, remittance, peer-to-peer, microtransactions, like we talked about, royalties, pay for exact use, shared economy, all this kind of stuff, anti-spam, messaging, all these ideas of use cases that can be used with your platform. What this does, just so people who are listening who are entrepreneurs, examples matter. And when a founder says, I'm building something, and they don't come up with the actual use cases, it makes an investor think, well, if you can't think of the use cases and you're leaving it to me, we got a big red flag here.
Yeah, I meet with a lot of founders who they start with technology and then they think about the use case, and it's you really need to come from the other direction. It's like, what problem are you trying to solve? And then you can apply technology towards it.
Right. And here it is. We go deeper into a couple of them on the next slide, cryptocurrency landscape, some real life consumer use cases for tokenization and blockchain technology. Explain the 4 ones here. And
so here we pointed out 4 of, and we've got hundreds that we fleshed out, but 4 kind of use cases or case studies of how consumer apps could benefit, different types of consumer apps could benefit from tokenization and from blockchain. And so, for instance, a content app, which we've talked about, whether it's Newdig or Pepo, could provide tokens to its users for upvotes that rewards relevant content. It can do so that people who are creating kind of valuable content can earn, and other people could decide whether they want to they could see in the system the transparency of how did someone earn their tokens. And if I want to buy a service in that system, I could decide, do I want to take out my wallet and buy more tokens, or do I want to contribute content? Either way, you're contributing effort. The question is that effort in money, or is it effort in time and expertise? And then
which is such a good one, because if I was trying to get on the front page of Dig, I could either try to spend all my money manipulating people to get them there, or I could just say, screw it. I will pay 100 tokens, $10 to be on the homepage for 10 hours.
Yeah, and look, this is like how GoTo started before Google AdWords, right? It was really have a bidding model for online advertising. This is, you could create a similar type of model with transparency. But now you could use it also. I think another example that's it's actually kind of derivative of this one is loyalty programs. So think about having kind of interoperability just between loyalty programs. And this is obviously a space that people have looked at for years. But imagine if you could take your Delta airline miles and spend it on American Airlines, and not have to first convert it to cash and kind of pay an intermediary.
Ridiculous, yeah.
And then imagine if that was also to Pete's Coffee or to WeWork, whoever it is, that you're just basically you have this kind of interoperability across all these different kind of point systems. Yep. That's a whole other area as well. We've also looked at things like, I'm a big fan of Unsplash in the photography space.
What is that?
Unsplash is the world's largest repository for royalty-free, license-free amateur photography.
Really?
And a lot of people, so they have over 300 million.
So you can just buy it one time.
No buying. You just use it for free right now.
Use it wow.
Yeah. They have 300 million API calls per month. This is developers are building on Unsplash.
And so Unsplash will just do, and then those people just want to get a link back.
So right now it's just a good service is all it is. There's no monetization model. It's ripe for a token, right? This is the kind of thing where, on the business side, you could have the tokenization of the API calls. You could have the tracking of where the photo is actually appearing across the internet.
Yeah.
You could have royalties, commissions. You could have bounty programs. You could say
you could run it through a CDN. And
exactly.
You don't even have to. We'll serve it for you.
Yeah. Imagine if you were to give a bounty for, I'm looking for photos of baseball parks, and based from that, photographers could submit, and they could basically claim
run contests, right?
Exactly.
Yeah, I'm looking for puppy photos and with babies. Give me puppies and babies, and then obviously run a contest, and people vote out which ones, and that's the number of tokens you get.
And I think this staking or kind of putting in bounties is something that people would never do with pure fiat cash. You're not just going to put up $10 and say, okay, maybe I'll get it back if people come submit to this bounty or contest, whatever it is. But with tokens, it becomes a lot more easy, a lot more palatable. And you could also have that the bounties or kind of or the staking, maybe something comes back to you if certain criteria are met as well, or maybe it's a multiple people staking.
So you see multiple companies using the Simple Token platform.
Yeah, look, we're building this as if, another way to put it is, we said that sometime in the future, we imagine that if a company wants to launch a token, they'd probably be buying or renting that service from AWS. Yeah. Right. But we said, why don't we build the platform that thousands of companies could use, to launch their own tokens?
And so you'll have this, what I've just pulled up here, which looks like the heads-up display for the token owner.
Exactly.
The people running the token program, we can see, okay, this is how many simple tokens we started. Here's the exchange rate, and here's how they're being utilized. Just sort of the back end, the Google Analytics of your tokens.
Yeah, it's sort of Google Analytics, but what's really fascinating about this is you're managing an economy too, right? And so it's more than just you can't just be it's not just seeing, okay, how was our traffic yesterday? You really need to study in some ways and have alerts and kind of ways to monitor, where are the sources and sinks? Who are the big earners? What are kind of the gaps in the economy? What are the trends we're seeing? It's almost like, it's like you are giving people the tools to do macroeconomic analysis without having to be an economist, right?
Right.
Yeah.
Yeah, you can actually see how people in this dig example getting voted up, your comment getting voted up might be more valuable. If Quora had a simple token,
exactly.
It would be, that's the obvious one. We did this at Mahalo Answers back in the day. We just put a Mahalo dollars on it. And we had our own little virtual, we called it virtual currency back then. There was no Bitcoin really. And we thought this was a fun way to just reward people. If they answered a certain number of questions and they got a certain number of votes or number one answers, we would just give them a towel with Mahalo logo on it, or a Mahalo mug. They could, and people loved it. It was amazing how this little economy got going.
Look, the use cases for this are endless, and they can seem silly at first, but then when you start to kind of expand on them, you start to roll back a layer and a layer. So imagine, for instance, if there was amongst entrepreneurs that a transparent way to see how many launch tokens they would need in order to be on this show. Right. Right.
Fascinating. Yeah. So let's talk a little bit about how you'll make money from this. You're going to are you going to take a percentage of the tokens? Are you going to just charge a SaaS fee? Because I've been thinking about this, and I've been also thinking about it in relation to angel investing in venture capital. Brock Pierce has been doing, Brock Pierce, who I think is going to be at launch scale, I just heard, he did 10% or $10 million of his fund from accredited investors, and his venture fund has a token or a coin that can be traded. So if we're LPs, we could actually, and we could have rules around it, which is you could sell, but you have to tell me first as the fund manager, I get first shot at whatever price you want, and then it will go out to everybody else.
Yeah,
I have first right of refusal, or I need to approve. I don't have to approve existing LPs, but I do have to approve new LPs.
Yeah. So let me tell you how we've set this up. We've been really careful on this because we really wanted to make sure that, first of all, I think there's a lot of ICO token projects out there that are ill-advised and could be getting into some trouble. And we said we wanted to make really clear from the beginning that we are building something that is software. It's not a security. It's a utility token.
Explain what a utility token is versus what I just explained, which would be equity.
Yeah, and so I'll back up a second. It's like, so the use, we basically have Simple Token is a set of protocols. So it's a technology protocol. It is a software suite. And then it is powering an ERC20 token called Simple Token. And member companies can basically use Simple Token to access the software, to deploy their own branded tokens that are staked with Simple Tokens. The branded tokens are deployed on side chains, while Simple Token is on the public Ethereum. And by setting it up this way and having the right governance around this, essentially the utility of the Simple Token is it enables you to deploy your branded tokens and to use the software. But the token itself, the Simple Token, is not a security. There's no return on an investment. It is just part of enabling an economy is all it is.
Got
it. And we've taken huge precautions to make sure about this.
The SEC is getting a little bit more clear on it.
For us, regulation in this space is great. Right? Yeah. We want to see better projects. And we actually think that there should, just like in the late 90s, there were way too many IPOs that were not companies that were not ready to IPO. Today, there's way too many companies considering ICOs that should not be. We would rather see a lot of these projects that if they are a good, legitimate project, they should build on Simple Token rather than creating all their own technology.
Right.
And we can create a safe environment for them to deploy their tokens. Because when you launch your token with Simple Token, your token doesn't, we don't want thousands of tokens floating out there on exchanges. Your token doesn't float. We also are building, and this is not to go too deep in the weeds, but there's things that you need to do to enable consumer app tokens that I think a lot of folks don't realize, such as price stabilization. Right. So if you are running Dig token, and let's say you're Jason and you earned $10 this week, if tomorrow that's worth $1, you lost all faith in the system. Right. If tomorrow it's worth $100, you're cashing out and running away, or maybe you're hoarding, right? And so we would be really careful about these kind of perverse behaviors that you could, or kind of mistakenly, exactly, yeah. And so we've built all these really interesting kind of mechanisms that by staking Simple Token, and then using Simple Token and kind of a basket of uncorrelated crypto assets, we can enable you to stabilize to your end users your own branded token, while enabling you as the company to have appreciation if Simple Token goes up, have a buffer if Simple Token goes down, have insurance policies. And there's a kind of thinking that goes into this that the average company just isn't going to do on their own. Right,
because it's just like Amazon Web Services saying, hey, we're going to think about the redundancy of S3 and storage in cold storage in a way that you wouldn't have the time, or you would only get to after a crisis or something. Right? You're gonna have anticipated a lot more.
Yeah, I mean, and it might sound like just simple things, but they're very complex and they're very high value price oracles, right? So end users of a service should be able to set their prices in their local fiat and have the kind of the price in your branded token automatically convert.
Sure.
So that takes back-end work to enable that.
Yeah,
right?
Why not be able to just drop it in with code and not have to build that piece?
Exactly.
What do you think of this, like Tezos? I just had them on the program. They raised over $200 million. They have 90% of it to a nonprofit in Zug.
Yeah, so without commenting on individual...
They took down... I think a $20 million payday, because in the documents it said the originators of the software will get 10%, 5% or something, or 10%.
Yeah.
And so they basically got not only their stake in the tokens, which will be vested over time, which seems fair, but they just got like a $20 million payout.
Yeah, I mean, this makes me gasp a little bit, because I think you really... look, I've been around the venture world for a while and been building companies on equity, and... we shouldn't be giving large payouts until we have, products that have succeeded, right? And so I think it's important to have good governance and kind of to set these things up for the long term.
Yeah.
But I don't want to comment on any specific project, but I'll tell you how we're setting this up.
It was interesting. In this project, everybody who bought the tokens knew this.
Yeah, look,
so it's not like they did something wrong. Just the scale of these is so large.
Yeah. So
why is the scale of these so large?
A couple of things, and I'll tell you how we're setting ours up. Right?
Yeah. I want to hear that too.
Because the scale so large right now is because you've had a lot of money a lot of people have made a lot of money on crypto, right? And they're holding on to a lot of crypto assets, whether it's Bitcoin, whether it's Ethereum, and they're looking for other places to invest those in. And if you look at the equity markets, like say the stock markets, do not have a lot of volatility in them, right? So there's and there's not a lot of places to get kind of these outsized gains. And so you have a lot of people holding on to crypto who are saying, okay, we've seen, things that have gone up by 5x or 10x
or 5,000,
right? But even like some of these token sales, someone said to me the other day, is like, if your token sale doesn't go up by 10x in 6 months, it could be deemed a failure. I'm like, come on, that's insane, right? Like, what kind of market is that, right? Like, we'll be happy with a 20% gain in the first year. Come on, right?
Well, like 20% would make you Warren Buffett. Yeah.
Exactly, right? So, like, come on, right?
Yeah.
So perspective is important. Look, in terms of what we're up to, what we've done, and you asked me how we're making money, going to make some money from Simple Token. So what we've done is we've set up 2 companies for Simple Token. One is a nonprofit foundation based in Hong Kong. We decided on Hong Kong as domicile because various reasons, both tax, regulatory, and just thought it was a good environment to set up the...
They're very pro crypto.
I'd say they're supportive of projects that are good projects. And so what we're seeing, so their equivalent of the SEC did a kind of a paper last week, very similar to what our SEC did in the US, which is basically saying if you're a security, we're going to treat it like a security. If you're doing kind of utility tokens and things that have value with the token from a software and kind of data standpoint, then we'll support you because you're innovating, right? And so what we've done, we created 2 companies. One is a nonprofit foundation, and that is where the token economy will be managed with good governance and also the open source code, the Simple Token protocol. And then we create a separate entity, which is the Simple Token Company, which will be a for-profit entity that will build a software package and services on top of that.
Right.
And over time, it could be any company that the foundation is contracting with to do so. But at the beginning, it'll be the foundation is contracting with the Simple Token Company to build this. And that company, I believe, if we play our cards right, and that's a company that I'll be managing, could be immensely valuable. This is creating the example you gave is like the Twilio or the Stripe of blockchain for consumer companies. There's a whole lot that's going to need to go into that, to kind of making the back end, the user experience kind of really simple and easy for, and we still haven't decided yet if we're going to charge based on a SaaS model or based on a transaction volume. I'd like to be as close to kind of like a AWS model as possible, where it's you pay for the value you're getting
for utilization.
Exactly. And also as an entry point too, right? And there's also another interesting,
well, if you do it based on utilization, then if I'm starting a token for Jcoin, and it's only got 1,000 people using it, I'm paying you $50 a month. And all of a sudden, if it becomes 5 million people using it, I can afford to pay you $5,000 a month. So you will grow. Exactly. I can grow with your service, which was the secret of cloud computing versus having to rack servers.
Exactly, and that's like some people said. So are people going to have to buy, say, $1 million worth of Simple Token to launch $1 million worth of the branded token?
Yeah,
like, well, we're going to figure out a pay-as-you-go program so that you could have $1 million worth of Simple Token staked, but you don't need that much actually in cash outlays, because we can support you on a monthly subscription basis based on visibility into how much your users are actually kind of converting to fiat or whatever it is on a monthly basis.
So Simple Token will become its own currency. I can have my own Jcoin, which is back-ended by Simple Token.
Correct.
Is that the way to think of it?
Exactly. And then in terms of, so we are actually in the middle of the token generation event process right now. So we are going to be doing the Simple Token sale on November 1st.
Oh, congrats.
And well, no congrats till we actually do something, but thank you though. But we've begun pre-sale. So pre-sale is we are accredited purchasers who, mostly institutions, who are putting up money now before the public sale. And our goal, so basically we've set a hard cap of a maximum of $40 million worth of Ethereum that we are taking in the entire token sale, 50% in pre-sale, so 20 million. And from the world I come in, $40 million is a lot of money for a company.
Yeah.
But also we're building a very large software package, and we're taking
How much of the software is built already?
We've started it.
Yeah.
We've definitely done a lot on the architecture and the specifications of it. We're utilizing a lot of things that have already built by the Ethereum community as well,
right.
and looking at what could be done in the near term.
When will it be ready for utilization? If I want to do my J-Coin, is it first quarter next year, second quarter next year?
So we think we'll be rolling out the first couple companies, including Pepo, in the first quarter of next year, and then being
of
2018, and then kind of rolling out kind of the broader availability to Q2, Q3 of next year.
Great.
And yeah, like it's an exciting project, it's large scale, but also like, you know, if we raise 40 million, it's not about, I don't see the token sale as a fundraise. I see it as empowering kind of almost the endowment of the community. Right. So what we've done with our token sale, for instance, purposely is 30% of the tokens that are being created are being reserved in what we call a network accelerator program. So it's basically creating a pool of tokens that we can give to the J coins of the world, to
Bitcoin or whatever,
to jumpstart them, to get them to kind of start building the network ecosystem.
Giving people in an incubator free Amazon Web Services for year one.
Exactly, right. Yeah. And so we're in the middle. We just started the pre-sale last week. We've received some great commitments already from folks who want to be involved, and we're just trying to be really smart and cautious about it at the same time. Taking great strides to make sure that, you know, it's done the right way. We're not out there trying to raise $200 million. Yeah. We capped it at 40, period.
Right, because you don't want to get out of control.
Yeah, yeah.
And so Pepo kind of gets sunset, or it'll be just an example of how to use the simple token?
Yeah, so we believe that the Pepo example can be a great example, but we also think there could be thousands of them.
Yeah,
and so
the main focus of the company is simple token.
Well, so we have two things. We have a great team of 25 people on Pepo, and they're actually right now in the 500 startups program in London, and they're learning a lot and doing a great job of kind of looking at how to refine and enhance the Pepo concept before we layer on Pepo Coin. Mm-hmm. What's great about having Pepo already as part of the project is that it enables us to, you know, basically build with customer one from the beginning rather than building in a vacuum.
But this is a new company, new structure.
It's an entirely new company, new structure. Yeah.
So did you give those investors in Pepo interest in this one, or?
Yeah, we've gone out of our way to take care of our early investors. Yeah. So one is we're giving them tokens. Simple tokens, and then we're also giving them equity in simple token as well.
Yeah, it's always very interesting when a founder, you know, starts something and then all of a sudden it's like, oh yeah, but we really should be doing Slack. And then do we keep the existing cap table, or do we shut this down, or do we do some hybrid where we give people a little stake in the new
important thing for us was that one is we want everyone who invested in Pepo. Look, this idea was gestated inside of Pepo for over a year now. Over the last 6 months, we have several of us who've spent all of our time almost on this. The investors who invested in Pepo, you know, they helped create this, and they should be rewarded for that. Yeah. At the same time, it's very important that we set Simple Token up as an independent company. This is not the case where you're going to say it's a spin out. This is an independent company, and especially the foundation needs entirely independent governance. Right. The foundation needs to be able to, I'm going to be running Simple Token, the company. Right. The foundation needs to be set up in a way where the foundation could tell me 6 months from now, Jason, we're cutting off Simple Token company because we don't believe you support the interests of the foundation. Right. And that needs to be okay.
Yeah. No. In the same way, Jimmy Wales left Wikipedia to do Wikia. Yeah. And they tried to make it clear, they weren't always successful, that Wikia was a for-profit entity and Wikipedia wasn't. And there were actually some rough moments where, you know, Wikia was willing to do an episode guide as an example, or to drill down into specific characters in the Star Wars or Marvel universe. Yeah. And they got Wikipedia to agree to not do that level of depth. But then eventually Wikipedia was like, well, we're kind of done with the Star Trek page or the Star Wars page. So can we do a Boba Fett page as opposed to it being a section of The Empire Strikes Back? And then the Wikipedia was just like, yeah, we're going to compete now. So sometimes you do a search for, you know, some character even further down than Boba Fett, or a song from Bob Dylan. If you do a specific song, now the Wikipedia will have a page on Girl from the North Country, as Wikia might, you know.
Wow, okay.
So it's very interesting, you know, where you do have to have some independence and have people, you know, decide these things. How do you, how much does it cost people right now to do these ICOs themselves and to set one up?
So it's actually very expensive.
That seems like it.
So I've already spent, my co-founder and I have already spent $600,000 towards the ICO process.
Wow. And so you have to hire a really great law firm?
We've done law firm. We've done legal opinions in 9 different jurisdictions at this point. So we've done, you know, US, EU, Singapore, Hong Kong, China, Japan, et cetera, right? And
so you do all those legal opinions so that you can take money from those jurisdictions.
We spend a lot of time on the token design. We've worked with some great economists and people in like token economies. We have hired firms that are working with us on accounting and on governance. We work with PwC on a big project just around having good governance behind the foundation, so that it really is a separate entity. I mean, it's costly, and look, I also think that individual apps should not do ICOs.
Why?
I think that it's because there's no reason for each app to go and build everything themselves.
Right.
And we're still in the plumbing phase of blockchain. And so we should focus on projects that are going to enable this to scale rather than one-offs.
Yeah, it reminds me of the early days of the internet with content management systems. You had a company, CNET.
Yep.
And they built their own CMS because there was no such thing as a content management system. How to publish an article, how to publish a photo, publish a video. And then they had Vignette. Which was their internal one. I'm taking it down memory lane. This is something only people with 20 years in the industry will know about. And Vignette wound up becoming, I believe, a bigger company than CNET for a long time. And it was a publishing platform you paid $50,000 a month for. You paid $500,000 a year, $1 million a year, and it powered Starwave and all these countless other companies. And then, of course, WordPress came.
But we're still like in the mosaic phase of blockchain.
Yeah.
Like it's like even before like websites at this point. Like we're like get the browser right kind of experience.
Which one's going to become bigger in your mind, Bitcoin or Ethernet? I'm sorry, Ethereum.
Yeah, I think it's like I'm first of all I'm not a speculator, and I'm not I don't even want to invest in certain things that I don't know enough about.
Right.
I think that technology that enable applications have that's where I would put my money on.
Great. So with something with smart contracts.
Yeah, I think so.
There's another one after Ethereum that people are talking about that's pretty good. I don't know which one it is, Litecoin or
Litecoin, something? Ripple. I mean, there's lots.
Well, Ripple's a disaster. That company was doing so good, and then they just totally borked it. And I haven't heard from it again.
We'll see. I've heard some decent things recently.
They just changed the whole management over or something, and they're trying to do a recovery, but they were so early.
Well, that's there will be, I would say shakeout's the wrong word, but there'll be lots of companies who try things in this space, and some will succeed, most of them will not, and that goes back to where you started this whole conversation with entrepreneurship. Is that you got to be willing to get out there and to try things. I'll say, Jason, it's like after Fab and Hem, I started a company called Pepo.
Yeah.
And, I had no idea whether Pepo will be successful.
Yeah.
To this day, I still don't. But I also know that I never would have come up with Simple Token if we didn't work on Pepo. And I think Simple Token is probably the most exciting project I'll ever work on. Yeah. So that's, one thing leads to the next.
I think this one thing is a really important lesson for founders is that when you're in the game and you're creating stuff, you have access to different opportunities and data than you would have if you were sitting on the bench.
Absolutely. Yeah.
And that's the thing that, waiting is such a mistake. Once you get in there and you're building something, you start to uncover in your exploration the true opportunities.
Yeah.
And then all of a sudden, boom, something breaks out for you. I've seen it over and over again. Even if you look at Uber, they were Lincoln Town cars, and then ride sharing, which Lyft had started a little bit earlier than them, and there was a company before them, Sidecar. Yeah. And there was even a company before that was doing peer-to-peer car rides with tips. You just would tip your friend on an honor system.
Yeah, and that's so there's
and that became much bigger for Uber than ride sharing, and Uber X is much bigger than Lincoln Town cars.
Yeah. And that's another thing that's kind of within what you're saying there is it's not always about the idea; it's about the execution.
For sure.
And that's why so go back to we published our deck on online for anyone to see. Well, in the end, someone's got to figure out how to go build this stuff. And to go build it is not just write code. It's actually put all the pieces together and operate a business.
Yeah. I am super fascinated by it. And when I see so many smart people getting involved in it, it makes me realize that there is also this very interesting thing that happens when a new technology comes out. It's almost a self-fulfilling prophecy, which is if intelligent people start to go, hey, there's something here, they start building, and then the opportunities emerge, and they kind of will it into being, which is what happened with the web, which is just so many people looked at it and said, oh, wow, why doesn't this do animation? Or this, why can't I stream my radio across this? And then Mark Cuban builds broadcast audio net. She's like, well, I can't. And Rob Glazer's like, well, I'm going to build real network. And because audio sucks. We need to have radio on here, and all of a sudden you had 6 or 7 people have that same epiphany, which is, why can't I stream radio here? And all of a sudden, then you can. All right, listen, this has been great. It's great to catch up, Jason. I wish you all the success in the world with it.
Thank you so much for having me, Jason. Really appreciate it.
Of course. Yeah. It's been a couple of years now, and you have my respect for being so indefatigable. Congratulations. And so wait, are you going to raise a venture round as well for this, or did you just skip that whole process?
No, so I think...
Don't you want to have like the benefit of the venture community in this?
Yeah, absolutely. I actually think that Civil Token, the company, will raise an equity round.
Sure.
We have a lot of folks that have actually wanted to invest in it, and we kind of said, let's not try to do 2 things at the same time, and let's execute a really good token sale, and then we will come back and do an equity round. The
token sale performance will then drive the equity round.
Perhaps. I mean, it's like, I look at the token generation event is about creating an endowment for the community. It will help create the product, but ultimately we still need to create a business, right?
Yeah.
And so creating tokens is different than creating a business. And that's where venture capital and board members and having, that's where that comes in.
Governance.
Exactly.
Yeah. And now that you've been through it a couple of times, it's interesting. I was talking to Vinny Lingham, who I think you know, and he raised so much in his token offering, he just said, I don't think I've ever got to go to a venture capitalist again.
Yeah.
Do you think it's the end of venture capital? If this
I don't think so. I think
why?
Well,
Why?
because first of all, I think that we're at a moment in time right now on this kind of crowdfunding of projects, and some of these projects will be determined to be securities, and they'll have all sorts of limitations to them. I also think that there is a role for professional investors, and professional investors will play a role in this new creation of this next internet. Some will be on the equity side, some will be on the token generation side. I don't think it's the end. I also think that the market will not support several $100 million ICOs. I think that was an aberration of kind of just a gold rush.
Like it.
Yeah, I mean, it's just it's too much.
Well, you think about it. I looked at them all, and I read the ideas. And I was like, you know what? I have to tell you, I'm sure Filecoin is a bunch of great people, but I've seen that idea 20 times. And the idea that we're going to all use our storage to build this giant storage cloud, when Amazon S3 is doing so well and every other company has one.
I think there's a TV show about this.
Yeah, is there?
It's Pied Piper.
Pied Piper. And I'm like, this is kind of crazy. I also invested in Space Monkey, which had this idea a long time ago to put a device in people's homes and it would back up to each other.
Yeah.
But that was at a time when things like some of the online backup services were throttling you, and it was very slow and it didn't work. But now, since Amazon, Google, and Apple have 1 terabyte for $10 a month or whatever, like, why does anybody need to create this virtual thing?
I would love to see Filecoin be successful. I'd like to see 100 different variations of Filecoin be successful.
Yeah, but
it's not by giving them $200 million.
No, let them earn it over time.
Exactly, and that'll be it'll be companies that get 10, 20 million and prove themselves, and then they go to the next phase and the next phase. What really scares me is entrepreneurs who have never started a company before. Being handed $100 or $200 million.
Yeah, how's that going to work out?
Yeah, and we had too much money at Fab.
Right.
But
you had seasoned investors on your board.
Seasoned investors and executive team.
And
real revenue coming in.
Yeah.
Right?
No.
And so it was like, and we still, it's like, too much money is not always a good thing.
And also you could, when you have that much money, there's no way to stay on the rails, because you're going to get so much distraction. You're not going to be thinking, okay, I have to prove this in the next 18 months to get the next, capital.
Yeah.
So there's a reason why there is this process of Series A, Series B, Series C. It's because you have to hit milestones to get to the next one.
Yeah. Yeah.
If you clearly hit the milestones, you have multiple offers. If you don't hit the milestones, you have 0 offers. And if you're somewhere in between, you may or may not make it.
Yeah, and I also think that there's a difference between the success of an economy and success of a company.
Correct.
Right. And
explain what that is.
So all right. So I take the approach that we are creating a token that is going to enable, it's almost like a university endowment or like a pension fund, right? Which is basically for the benefit of the community that is creating this, the open source software that's creating, kind of enhancing the protocols as technology develops, that is enabling companies to get seeded on their own tokens based on our token. But that's for the benefit of that community. Now, our ability to build a business on top of that, right, is entirely separate. And so we'll get some cash proceeds from creating the token because
you keep 10% of it, 20% of it.
Well, I say for the team. I'm saying like for operations, right? For building this software because that benefits the community, right?
So having some developers dedicated to it, right? And some hosting,
right? And that'll help build this out. But that is not intended to be our financing. That's intended to be kind of like prove out that there's value to this economy. But that's different than build how do you grow a business? And I don't think the answer is every time you need more financing to just go and sell more tokens. There's something about that just doesn't seem right.
Tears. I've seen this movie before. When you raise this much money, and then I looked at all the ideas and I was like, this idea would not pass mustard and with the venture community.
What's actually been great for me is like with Simple Token is the number of people who've looked at it recently and said, I'd like to buy equity, not buy tokens.
Yeah, I would absolutely 100%, if you gave me a choice, pick the equity over the tokens.
Which has been great.
I might go 80-20.
It's been encouraging for people to hear it because it's like, okay, it means that sound investors believe in the idea. And that also tells me that even if Simple Token isn't the one to execute on it, someone will. Yeah. Right? Which is what the venture community is all about.
Exactly. All right. Well, hopefully it passes mustard, not mustard. I'm tired. It's been, it's a little bit tiring. How do you keep your energy up? You're now in your 40s now.
Yeah.
You find you're a little more tired sometimes?
No, actually, I'm more.
Energy?
My secret is I work out every morning.
So smart.
And there's rules that I have to life right now. I try not to get upset about things. I try to be nice to everybody. I work out every morning. I don't eat on the 6 a.m.
6 a.m.
Yeah. I don't eat on airplanes. Don't drink alcohol on airplanes. It's like I have certain little things.
The airplane thing? The food is so bad.
It's still whether you're on the best airline in the world, it's still microwave food.
Yeah,
right. And so it's like
bring some food with you.
Yeah, and the other thing is I also try to make sure that I have me time. Right, and it's like time with my husband and my friends, and saying like you can't just work nonstop. Right.
Yeah, I mean you should work intensely when you are working. And then you should have downtime because that's when all the great ideas happen.
Exactly. Yeah.
I mean, I started going on, I was doing this 10,000 and then eventually 12,000 a day step bet where like we had 3 people in it. And if you missed, you had to pay the other 2 people $1,000 each. Nobody missed. It was like 60 days of 12,000 steps a day. Like literally nobody missed.
Was it auditable? Immutable?
Well, you all were on Fitbit.
Okay.
And the Fitbit it's an honor system to it. I could put the Fitbit on my dog, I suppose. But we put the Fitbits on, and nobody in this group would cheat each other. It just wouldn't happen.
These would be interesting with automated payouts and everything. That'd be a really interesting system.
Well, I do think if you would trust me, when I did this, I lost a couple pounds, and I felt great. And then when we stopped doing it, I immediately just took the Fitbit off, and I was like, oh, God, I need a break. And I went down to 7,000 steps a day. Now I park like 2,000 or 3,000 steps away from my office.
Smart.
And then I walk to the office.
That's good.
And then I walk back to get my car. Yeah. And that gives me my extra 6,000 steps a day.
So I have a weird, I don't know if it's a secret, but I haven't done cardio exercise in like 3 years.
Really?
Yeah. I
just weights.
Just weights.
Yeah. See, that's the thing is the intensity of weights and also
it gets my brain going. Like it's like that wake up moment every day. It's like, and if
a little kettlebell. I love that feeling with the kettlebells. I just feel like I'm like a Spartan.
Like a He-Man. Exactly.
Yeah. It makes me feel like I'm in the 300 or something.
Yeah, exactly.
I feel like I'm an animal. Like I feel like I'm Batman. But like a Christopher Nolan Batman,
Yeah.
Like a real Batman.
Inspiring.
It's kind of inspiring when you do those weights. But also what the thing that people don't realize is when you're in your 40s, I think it's starting when you're 40, you have either a half pound or a pound of muscle atrophy a year.
Wow, okay.
So when you think about it, like we're guys, we have like 80 pounds of muscle on our body, whatever it is, or in some amount of skeleton, some amount of fat. Yeah. And then just every year you're losing a half pound of muscle. But if you pick up the goddamn kettlebell for 5 minutes every other day, you keep the same.
Yeah.
And if you pick it up every day, you may gain a little bit. It's like...
I always have to think this emotional, not like personal, like how do you talk about this stuff without sounding like a douchebag? Because like I'm like...
It's not being a douchebag.
Like, it's just like exercise is important. Yeah.
It's really important. I think it's important for founders to know because I see a lot of founders investing get way out of shape.
Yeah.
You know, if you're a first-time founder, it's like it's the first-time founder 50.
Yeah.
Like, I see first-time founders go from 160, 170 pounds, all of a sudden they're 220.
That's not sustainable.
And I'm like, that's not sustainable at 30 years old. Dude, stop eating chicken parm every night at 11 o'clock because you stayed in the office that late and using it as a reward. You have to go to the gym.
Yeah, I completely
Clear
agree.
your head a bit, right? And just maybe whatever, go for a walk.
Yeah.
All right, listen, it's not douchey at all. It's very important that people take care of their health.
Yes.
Sound body. I learned this from Justin Kahn.
Okay.
Justin TV, Justin Kahn.
Yeah.
All
Sure.
he does, he's hilarious on his Snapchat. He's like part Tony Robbins, part Gary Vaynerchuk, part Jason Calacanis, and he's just sort of like, fit body, fit mind, fit startup, whatever. He's just always telling people they have to work out, and he literally. Now this is a little douchey. He Snapchats his workouts.
Yeah, so that's I don't do.
That's kind of crossing the line a bit,
Yeah.
I think. But you know what? I understand he's got good purpose in it, which is like you want to really remind people that if your body is not where it needs to be, you're not going to perform.
The other thing I say to people is get out of Silicon Valley.
Why?
I just think there's this bubble here of, it's a great place for building products. It's a great place for networking. It's a great place for raising money, venture community, but it's not the real world. Right. There's a whole other world out there. Like I love living in Berlin.
Tell me about Berlin.
Yeah, I mean Berlin is like.
Are you in East Berlin, West Berlin? Where are you?
In Kreuzberg, which is technically in West Berlin. It's a Turkish neighborhood.
Cool.
Along canal.
The startup scene is popping over there.
It is, and Berlin is like a melting pot now for people from all over the world are coming to Berlin. Like you walk down the street, you'll see people from 30 different countries, and
so it's like New York in that way.
Yeah, but Berlin is like very underpopulated. It's very cheap. Put in perspective.
So it's like New York in the 70s.
It's like Brooklyn before it became hip.
Cool. Like when I lived in Brooklyn.
Exactly. Yeah.
Yeah. When I lived in Brooklyn in the 70s and 80s.
Yeah.
It was specifically not hip.
Yeah. But there's an energy to it. And then I work a good part of my time in India, which gives you a whole other perspective as well.
Where? How'd you wind up in India?
So Pune, India. I've had an engineering team that I've worked with since 2008.
Pune.
And we started working together when I was doing Jobster. We then started social media together. We sold social media, went to Zing, and we did that together. We then started Fabulous and Fab together, and
I like the original Fab.
Yeah.
That to me was I was going to invest in that one.
You wanted to, I remember that.
I so wanted to because I am gay kryptonite. Like that's what I always my gay friends tell me
So for people who don't know that before Fab was a design shop, it was a gay social network.
Exactly. Yeah. And so I walk into a room literally if you have gaydar, you're just like, well, that guy's totally not gay, totally not attractive to gay men in any way. So I went on to gay.com or fab.com and I went into the social network and I was like, this is a party. It was so active.
Yeah, there's a vibrancy to it. Yeah.
It just had so much going on. I was like, oh my God, gay Facebook, so brilliant.
Yeah.
This would have been huge.
Do
you ever think that you should have done that idea? Because I just think that if you had done that idea, it's in your wheelhouse. Obviously, you're gay.
Yeah, obviously.
And people still need... Well, you have a husband.
A husband.
Hey.
That right there, exactly.
Yeah, kind of a tip-off, but...
Or the Gawker article.
The Gawker. I always think tension's weird.
Gay tech exec has a husband. That was basically the article.
Yeah, they're like, oh my God. But let me ask you a question. In the gay community, how do they look at Nick Denton's obsession with outing gay men? And what is a gay? What do you think about outing people? Is it considered uncouth? Isn't that really getting up in somebody's business?
I think it's
political.
Hopefully, it's something that just it's gone. It doesn't exist anymore.
It doesn't exist, right?
And hopefully, I'm saying I think that was a time that I think it was cheap thrills, and there's no
for a gossip magazine cheap thrills.
Yeah.
But I also
especially for someone who the founder's gay. So really,
that was the weird part.
Yeah,
it was
totally
Nick
bizarre.
had you're hypocritical if you're not out, and he was riding Anderson Cooper and Tim Cook about it for a long time, and I was like, it feels kind of unfair.
I got on an airplane in 2009. And right before I was boarding the plane, is from New York City to Hamburg, Germany. Someone sent me a text that said, "There's this article about you."
Oh boy!
And it's gay tech exec, gay side unleashed or something like that, and these pictures of me and my boyfriend at the time, and and I was like, "What is this? Really?
2009?
Yeah, and also and anyone who knows." My Facebook's public, and clearly I'm gay.
Shocking.
It's not shocking, exactly.
Breaking news.
Whatever, that's fine. It's fine.
I thought that was always, to me, fascinating. The project, that original project, I thought that would be millions of users.
So the thing with it, what happened was the users wanted Grindr, and the team didn't want Grindr.
Got it.
Right, and so users wanted to use it for hookups and sex.
Yeah.
And we decided that's not the app we wanted to build. Now, we could have, and it would have been very successful.
Right. But it wasn't what you were interested in.
Yeah, exactly.
Now, you have to have founder product fit in addition to product market fit.
It's actually, I cannot emphasize this point enough. All right. When people are asking me for advice on their startups, the first thing I say, what do you want to build?
Right.
Right. Because you can't just follow your users. You need to listen to them. But what are you and your team passionate about? Because it has to start there. Yeah.
You know what's also fascinating? And now that I think about it, Grindr has had such a societal impact that it actually affected the hetero world, in that Tinder is Grindr.
Yes, for sure.
And Tinder is
straight Grindr.
It's straight Grindr now.
Yeah.
And it was like, when the gays were using Grindr, it was like, oh, that's crazy.
Yeah.
Now it's like I was watching. You watch Insecure on HBO?
I have not seen it yet.
Oh, watch the show Insecure.
It's good.
It's amazing.
Insecure? Okay.
Amazing. It's basically like the LA urban version of Girls. So it's a completely self-absorbed group of people. They just happen to be African American, living in Inglewood, where I used to go play poker at Hollywood Park. So it's kind of interesting to see those references. But they have a hookup culture, and with young kids, they've disconnected the concept of sex from relationship.
Yeah,
which I think is directly out of the male gay
possibly. There's this thing about
culture.
The gay handshake, which is how do you meet someone, go have sex with them.
Right.
Which
I think. Well, that was what they sort of addressed in the show, is like people are very much like, we could have sex and then decide if we're going to have a relationship or not. They kind of disconnected it, which is.
It's not for everyone. And I think
it's not for everybody.
But it's don't judge. Let people be people, and as long as they're not hurting other people, it's fine.
Yeah, that's what I think. All right, listen. Let's recap here as we wind up. Jason Goldberg is staying very balanced.
Trying.
He's staying healthy, and he is indefatigable and always has been. He sees a huge opportunity with Simple Token. I do not disagree with you. I would be very interested in hearing more about it. I think it's just the infrastructure needs to be built, because so many people, the people who are running real businesses are so busy with the real businesses that to go do a coin offering is like, well, why would I do that? I have all this access to venture capital.
Yep.
And so why would I waste my time? I'm doing great. Those are the people who need to be doing ICOs, but they need the infrastructure to make it easy, as opposed to the people who have nothing going on and their ideas couldn't pass muster with the VCs, who then said, I'll go ICO as a funding of last resort.
Yep.
We need the people who are on the top of the game, Reddit and Quora, to do their own coins. Which startup should do their own coin? What would be the dream startup for you to have on this platform?
I mean, I think...
Because you're not going to get Facebook of the world, but who's the next tier down who you would say, God, if we got Twitter or we got this person to do a coin, that would be such a win.
I would just say, 10 to 30 million users.
That's the sweet spot?
That would be an amazing place for us to build around. But we'll also build with apps that are completely from scratch, and we'll build apps with like 1 million users. And
how many apps can you actively work with right now, given the team size and everything? Or you need to have like a couple of dozen people on the platform?
Yeah, look, our biggest bandwidth problem right now is actually number of companies who would like to build on Simple Token, and just unable to kind of talk to them all while we're also working on technology specs and the architecture. So our biggest kind of hiring focus right now is on business development, kind of market development side.
Start doing hackathons.
Yeah, for sure.
It'd be really cool when you start doing hackathons and just say, like, listen, whoever builds the best things gets this many Simple Tokens.
Yeah, for sure. That's part of the program, for sure.
Pay them with Simple Tokens or reward them. And Pepo is pepo.com if you want to check that out. Social network around interest is very cool. And follow Jason. He's Beta Shop on Twitter. I don't know if you tweet anymore or no?
Yeah, occasionally.
Occasionally you're there. And simpletoken.org. I'm assuming there's an email list there, and they can look at the paper and everything. So sign up for all that. You want to stay, just if you're listening to this program and you're a founder, you're going to really want to stay up to date on Simple Token, because I think it's got a chance to kind of bridge the gap between high quality startups like Twilio did and then this new market. We'll see you all next time on This Week in Startups. Bye-bye.